Hello, everybody, and welcome to the 85th edition of LM's Weekly Wrap, our weekly program for the market related developments. This was very decisive week because we had certain important data points coming out of the domestic markets as well as the international markets. We also came to the end of the earnings season yesterday, I think, for the last set of results which are declared by the companies. And it's of course today was the result time, the time to declare the winners as well as the losers of this earnings season. That is the Q3 of FY24. But more on the global markets. First, we are joined by Jash. Jash, please welcome to the show. Kindly take us ahead on the global markets as well as the domestic markets, which will be followed by the sectoral outlook from my side.
Thank you so much, sir. It's great to be back. I'll be starting with the Nifty levels. Nifty is beyond 22,000 levels today. It went sharply close to about 21,200, 300 levels in the start of the week and the previous week. And today, if we go to see, it has recovered quite well. What we believe, we've seen the market from January, we've seen the market go into consolidation mode. It has been ranging between 22 and 21,000, and I think it is going to remain there for the next few weeks or months as well, because there are no positive or negative triggers right now for the market. Coming to the trigger points, I think I'll go to the US market. We had the Fed meet in this week, where the commentary, where the data points for the inflation were not up to what they were expecting. They were slightly not that good. So the commentary that was given was the rate cuts are in question now. They don't know when they're going to cut the rates. So that is when the markets gave up a lot of gains in the start of this week. And because in turn, if US doesn't cut the rates, India also wouldn't cut rates. So we don't know when. The rate cuts are certain, but when, that is the question. So if that is delayed, it will definitely hamper the growth in India, because at this level of interest rates, I don't know how much expansion, how much debt the Indian companies are going to take at this level of rates. So that whole, it's a cycle that forms. So I think we should wait where US comes and their data for the coming few months, and then take a decision on the market as well, because that will definitely drive Indian markets also, because a lot of foreign investment is also in line in India. So let's see what happens over there. Coming back to India, I think Q3 results are coming to an end, the result season. One thing that we have noticed is there has been extreme reaction to results. Because the market is volatile, the reaction after post results is very extreme. Either it's 10% up or 10% down. So I think this is a very classic bull market behavior and consolidation behavior, because in bull markets we see a sharp correction. We saw a very sharp correction in the PSU sector in the start of this week. So I think if we've been booking profits, we are very comfortable, because our average price is at a comfortable zone, and we also get opportunity to buy whenever the markets drop. So start of this week was a perfect opportunity to buy something that you've always wanted to own, but you felt it was expensive, that you might have gotten like 10-15% cheaper. That's about it for the global and domestic scenario. I'll hand over to Nirav sir for the sectoral outlook. Thank you.
Thank you, Jash. So coming to the sector-wise, I think as we rightly pointed out that it's time to point out the winners and the losers of this earnings season. Every earnings season has its set of winners as well as the losers. This earnings season also was no different. We start off with the auto sector. I think in our media interactions also we had indicated very clearly that the auto sector has reported a virtually a flawless performance. It's been a kind of a performance which one can only dream of. And I think whether it is the quarterly results, whether it is the margin trajectory, or whether it is the monthly auto sales numbers, or whether it is the retail data published by FADA, across the board, I think the outlook has looked very positive. We've seen positive numbers coming in from the automakers, the PV makers, the CV makers. The tractors are also trying to rebound, and the biggest thing is that the two-wheelers are making a comeback in the economy. So if one were to see today, I think the auto index, the Nifty auto index was up about 2% in trade, led by the likes of Mahindra and Mahindra, followed by Tata Motors, followed by Maruti, and we also had very, very strong outlook coming in from Hero MotoCorp, TVS Motor Company, as well as Bajaj Auto. So I think the auto sector has been performing exceptionally well, and even the smaller companies which we have highlighted time and again, SML, Isuzu, Force Motors, they continue to shine in trade. So I think the clear leadership to the market is being given by the auto sector. This has been followed by the auto ancillary space. In the auto ancillary space particularly, there is a lot of thrust on those companies which are catering to the EV space, that is the electric vehicle space. So I think overall these will continue to do well in the foreseeable future. Next is the banking space. I think this was the biggest letdown as far as the earnings season was concerned, as far as Q3 is concerned. I think the private sector banks, they continue to suffer from they've lost the flavor with the investors, and the contraction in the margins as well as the high cost of deposits has been a problem area for the private sector banks. We've seen tremendous amount of pressure in the likes of HDFC Bank, Kotak Mahindra Bank, Axis, to a certain extent even ICICI Bank. These are the pain points as far as the banking sector is concerned. On the other hand, we have seen a very, very divergent trend in the PSU banks. I think the PSU banks have made a great comeback in the market, led by the likes of State Bank of India, Bank of Baroda, Punjab National Bank, and a whole host of other PSU banks. So we've seen a kind of a dualism in the banking space. We've seen private sector banks come under tremendous pressure. The valuation was on the higher side, so that means that the burden of expectations was very high. But at the same time, in the case of PSUs, they've come back like the underdogs in the market, and I think they continue to move from strength to strength. The third category is capital goods. Capital goods continue to do very well, whether it's a like of Siemens, ABB, Thermax, etc. They're likely to do quite well. And the smaller companies, which we have time and again pointed out, likes of Elecon Engineering, Action Construction Equipment, Triveni Turbine, Schneider Electric. I think all these companies have done exceptionally well, and they are likely to perform very well in the foreseeable future. Another sector which I'd like to point out is the FMCG sector. I think this has been the loser of this particular earnings season. I think the biggest loser, and this is on account of the divergence which we pointed out. There's a kind of dualism which is prevailing in the economy. On the one hand, the masses are cutting down on their consumption. They are going in for down trading, and on the other hand, we see the premiumization trends or the luxury brands. They're growing from strength to strength. So there's a kind of dualism which we are seeing in the economy. This is prevalent not only in apparels, it's prevalent in real estate. It's also prevalent in cars. The trend towards the SUV is an indicator to some extent of this trend. So FMCG, I think the biggest loser was ITC. The stock has lost about 13% since the time the results were announced, and in a way I think it would be the biggest loser of this earnings season. So I think expect the FMCG sector, the entire FMCG pack, to remain under pressure going forward. IT has been making an attempt to recover, but I think it's more of a dead cat kind of a bounce. Although today there have been certain reports that the domestic demand is likely to revive, and that to some extent has helped companies like Infosys, TCS, etc. But I think the biggest earnings upgrade in the IT sector has come for HCL Technologies. So I think that's the way the things are going to progress as far as this sector is concerned. It's going to be more important because in April, the annual guidance will be declared by Infosys as well as HCL Technologies. Apart from this, we have pharma, which has emerged as a dark horse. We've time and again pointed out that pharma is going to be emerged as the dark horse of this. And today we've seen stocks, a lot of mid-cap pharma stocks like Wokhart, Glenmark, Natco Pharma, etc. have rallied very, very impressively in trade. Cement continues to do exceptionally well. I think we need not reiterate that again and again because it's been doing quite well. Infrastructure players continue to do very well, and if I were to just highlight the trend of the infrastructure sector, three stocks which have done exceptionally well. One is L&T, Ultratech Cement, and Tata Steel. All these stocks are an indicator of how the demand is going to move as far as the different sectors are concerned. Filhal, at this point of time, I think the stars of the market are the PSUs. We have the PSU refiners, we have the PSU bankers. Anything which is PSU is shining in the market. We've seen defense stocks, we've seen railways, we've seen power. And as far as our LM weekender stocks are concerned, I think Coal India has achieved its target. We have Cipla, which has achieved its target. A lot of companies which have achieved their target. And more so on the PSU side, we have Power Grid Corporation, which has achieved its target. Gujarat State Petronet, which has started moving. A lot of things to discuss, but time constraints will permit no further. So I hand over to Jash for the closing comments.
Thank you so much. It was a very detailed summary of our earnings season, and we look forward to the next week. And if you have any doubts or comments, please let us know in the comments below. Thank you so much.
Thank you.